The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, Wednesday's trade action came and went, and if you looked at the market at the open and at the close, things kind of ended up where we started the day in the grain trade. We had a WASDE report in the middle there, but overall, not much in the way of changes, and it felt like a fairly quiet report day. We also have the Federal Reserve wrapping up their two-day meeting on Wednesday. So plenty of topics for us to discuss. And we got the perfect person to do it with here today on the show. Mike Zuzolo, Global Commodity Analytics, is with us for our weekly conversation. And Mike, thanks for being back with us. And, we got a WASDE report day, you and I. Wasn't too eventful, though, when the numbers came out. A few minor changes, but largely an as-expected quiet report day, Mike.
Yeah, and I think that's a great way to set it up because that's how the trade saw it. And I think that's why we did drift back down towards where we were before the report came out. And I think part of that also is because we had the Federal Reserve getting ready to kick off their policy meeting right as the grain market closed. And we were getting quite a bit of mixed signals in the outside markets before the Federal Reserve came out with their update, Jesse, and we can talk about that more in detail. But I would like to highlight today on the WASDE report our old friend, the wheat. And I'm doing this because it was a big shocker to me what the USDA did as far as U.S. average cash price. And the way they got there was through a big reduction in Black Sea exports. 6.5 million tons reduction in production for Ukraine and Russia combined. That ended up being a 5 million metric ton reduction in exports. So almost the vast majority of the production reduction was taken out of the exports. USDA took our average cash price from $6 last month up to $6.50 this month. I think this world wheat situation is still a very good template for the corn world wheat situation. Not talking about price so much, but talking about the world supply demand situation for the grains. And the net of it was world wheat ending stocks did go down even with the US increase. Stocks to use ratio stayed the same at 31.6%. This chart right here is a global stocks to use ratio for wheat versus U.S. average cash price. I've been working this chart for about 25 years now, Jesse, and it's done me well as far as overlaying the U.S. average price against global stocks to use levels. And what I wanted to point out here was the orange arrow. We are as low as we were coming out of 2014, 2013 time period. The USDA has our average price still going down versus last year, even though they raised it 50 cents. I'm higher than last year because we are going down in stocks to use ratios instead of going up. The black bars that you see from the 2012 crop year up to the 2018, 2019 crop year, you see those black bars get bigger. That means those stocks to use levels are going from 26% remaining supply to upwards of 40% remaining supply. Now we're going back down again. And so I think USDA could even raise the US average price again in the wheat for the United States, even with today's production increase here in this country. But the bottom line for this chart suggests to me we are still at a 10-year low when it comes to stocks left over after demand. And unless we see a sharply higher US dollar or worsening trade situations in major developing countries that we work with, that Russian and Ukraine supply cut today should do us well, and USDA sees it that way as well. We did not factor that in today's price action, though.
No, we did not. We pushed back lower after we finally broke the losing streak on Tuesday in wheat. And, Mike, thinking about this world wheat situation and thinking about, could we see more potential cuts to the Russian supply? There's some chatter out there in the trade about that even after the WASDE. Of course, a lot of it's tied to the weather, the concerns with the drought, frosts. We have weather challenges. It's dry in Australia from what I hear. India's got some challenges, things like that. So Even though the U.S. crops looking pretty good, there's these world challenges I think that could be more in focus here as we go through the next couple of months ahead, Mike.
Yeah, that's an excellent point because, Jesse, what you and I are ultimately talking about right now is how comfortable do the managed money funds feel being so exorbitantly net short, especially in the corn, followed by the wheat. And maps like this, where you see Russia and Ukraine and their drought indicators showing very big warnings, if not outright alerts, in key areas. I think that the wheat crop in Russia could be lower at this point. I think it could be closer to 80 million metric tons versus USDA's 83 today. They are looking at getting some relief in Ukraine and Russia this next 7 days. I think between that, the Federal Reserve policy, and the harvest pressure in the U.S. especially, and good yields being reported, I think those are the three major short-term features of why we didn't price in that big jump in the average cash price. But as we'll discuss here in a minute, that average cash price means a lot to me because of where we're at right now in cash prices for wheat.
Let's take a look at that chart. Since you brought it up, the SRW cash wheat price, and I mean, walk us through, this price action that we're getting right now, and looking at the cash numbers and more. I mean, this wheat market's definitely been on a downswing here the last several sessions for the most part. So, I mean, what are you seeing on this chart? What's your overall feeling here as we're now post June WASDE?
Yeah, the first thing to think about here is this is a soft red wheat index done by DTN, and it's a compilation of a bunch of cash prices. And so it's a cash market price chart. It's soft red wheat, but soft red wheat is a very good barometer for the average cash price because USDA typically uses Central Illinois as their main hub for the average cash price for the wheat crop, even though you have all these different varieties all around the country. So we've got to get that out of the way. What I see in this chart is if the USDA went from $6 to $6.50, and that's the red line on this chart on today's report, how are you going to get to an average $6.50 crop price in this current marketing year when your very top number has been no better than $6.20 and your very low number has been around $4.70 pretty much the whole crop year to date for the 24-25 crop year? So it's an average. It's supposed to suggest to us you take the top and you take the bottom, and the average price is in the middle. And so my argument would be here is this chart clearly shows that we are a long way away from a 650 average cash price. If I've done a good job of supporting the idea that they are right about 650, and it could even be closer to 685, which was the top end of the DTN cash price back in 2014, as you can see on this monthly chart, then we still have a dollar plus upside in this soft red wheat DTN cash wheat index to be able to equate that average price up to 650. Right now, you probably couldn't get much better than a 550 or 5.25 average cash price for what we've done so far.
Well, I think too with wheat, it feels to me that with everything going on and the analysis you're laying out here, even though these markets have really kind of pulled back as of late, we held I think the 60, almost 62% Fibonacci retracement here this week. I mean, it feels to me that this wheat market, depending on how some of these factors come together, could potentially make a run back higher here if things unfold over the next couple of weeks the way they need to, right, Mike?
Yes, and I think this next 48 hours is really important because we'll be able to digest the Federal Reserve, and most importantly, we'll be able to look at the European wheat price action tomorrow and what it does in reaction to the WASDE numbers. Because of today's close, we were still trading around $7.10 in Paris wheat futures versus our price of around 630, 640. That's a big difference, and so you got to wonder who's right. And I would be disappointed, I guess, if I laid all this out, Jesse. I guess I'd be disappointed at the end of this week if we didn't get back up above last week's close in soft red of 627.5. That's kind of a number, plus or minus a couple cents, but essentially say we didn't do any damage to these charts. We went too low because of the USDA report. That kind of a mindset needs to be built up again. And again, to force those funds into being and feeling like they're in a bad position.
We're talking with Mike Zuzolo from Global Commodity Analytics here today on Market Talk. Real quick, corn, soybean action. I'll bundle the row crops together here. It felt like that the USDA report pretty inconsequential. I kind of feel like the row crops are already turning their attention to the end of the month with the grain stocks and acreage potentially here, Mike. Your assessment of corn and bean action here after the WASDE.
I've started to hear whispers of that, but what I'm really hearing is the weather side of the equation. Some of the commentary Wednesday afternoon, even though we saw another 0.2 of a percentage point knocked off the global corn stocks to use levels. And again, we're right back to where we were after 2013, heading into 2014. So again, a 10-year low reinforced again on today's report. And USDA did not hurt the demand. They did not hurt the exports at all. They actually took the wheat exports up 25 million bushels. But my take is that we're really talking about crop weather right now, and these good to excellent conditions being 13 points higher in both corn and beans than they were a year ago at this time. And the fact that we are still going to have a big crop in the United States, it's going to really keep a lid on the overall price action here. I don't think you can go down that path too far yet, though, Jesse, because we've got one big key feature in this summer weather pattern. That's the heat. What we're missing is the most important piece, and that's the dryness. Right now, the weekend weather for this country in the Corn Belt here is for a really nice flattening out of the ridge, big rains, and then we heat right back up again into the mid 90s, going all the way up into Des Moines and up into Iowa, up into northern Iowa, southern Minnesota. This weekend's rain is kind of like what we saw back in 2012. With the crop off to a pretty rough start. If we don't get this weekend's rains and we come back mid 90s, this is the make or break rain, I think, for the 2024 corn crop. So I am patiently waiting to see what the precip totals are and what the coverage is, given this heat dome that started to impact us pretty early in the crop year.
And the Eastern Corn Belt may see some of that heat and maybe not a lot of that rain. So I'll be watching things there in particular. You brought up the Federal Reserve on Wednesday. I should touch on that with you as well. They left their key interest rate unchanged. Got the dot plot out Wednesday. The consumer price index data was a little bit below analyst expectations Wednesday morning. Your overall assessment of where this all stands right now in terms of the Fed and interest rates and inflation, Mike?
Did they do enough to project new highs into the US dollar with the market assuming that they were not going to we're not going to lower rates this year after we got that jobs report last week? And I would say, looking at what I know right now, not having heard the full press conference, I don't think we did enough to spur another new high in the US dollar, because while they took us down to one rate cut in 2024 versus two back in March, they still kept one rate cut on the table. And they still are talking about making progress on the inflation front. And so there's a lot of word salad right now coming from Washington in terms of the monetary policy on a lot of different angles, the Fed included. We're just going to have to see how this dollar shakes out at the end of the week as well. And this goes in line with the CPI data that came out Wednesday morning that kind of fed the dollar bear in the idea that the CPI data was cooler. That opens the door to that rate cut. The dollar was down 900 points at one time during the trade on Wednesday, but it just didn't translate into the grain markets because everybody knew the Fed was coming. So that's kind of where I sit with that Fed policy right now. Again, I hate to put so much and lean so heavily into the weekly closes, but we've had so much information between the energy data, the inflation data from China, the inflation data from the United States, the WASDE, the Fed. I could go on with what we've gotten this week. It's just been a crazy week of data. So I think this week's close is pretty important.
I would agree with you there. I saw a report on the Today Show Wednesday morning as well that made me chuckle slightly, saying that the U.S. economy is very strong and that, the big things for folks right now is try to pay down debt, don't take on debt if you can help it, things like that. And then I'm thinking in my head, well, credit card debt's at an all-time high. So I don't see that rosy picture.
Government debt's at an all-time high.
I don't see that quite that rosy picture that is being painted out there. I guess
No,
that's my thoughts.
pretty hard to
Well,
knock down around $40 trillion of debt. You can talk a lot about them. It's pretty hard to do.
Very true. We could talk about that for a while. Let's go to livestock. I will make sure we have time for the proteins. I'll pull up an August live cattle chart you shared with us. Cattle trade a little lower at futures on Wednesday. Cash, though, feedlot prices still looking somewhat steady to robust. Your thoughts in live cattle right now, Mike?
I'm saying this not getting a really good hard look at the WASDE report for the meats at this point in the day, Jesse. So what I'll say is based upon anything surprising in that report, but I still feel as though this last half of June, because of the continued cash strength in the box beef, that translating into a negotiated cash price for cattle of that 190 plus level pretty consistently. We still have a significant discount in the futures market, not just June, but especially the August. And this is my August chart that I really am enjoying watching because I've got a wedge formation there with that yellow triangle. You see that the price jumped out of the resistance. Now we're going back and checking that old resistance, saying, okay, is this now support, or was just this a one-day wonder and we're going all the way back down and going to check the current week's lows? And I think this is where August live cattle have a very important role to play at the end of the week, just because of these technicals, and knowing that cash negotiated cash price is strong, and the weekly kill last week was only 3,000 head less than a year ago at the same time. So between that and the cattle on feed report marketings a couple weeks ago, we can get a pretty good idea. We're running very current, so the demand is very strong. USDA is saying that on their retail report again this past week. So I've got several things out there, and I'll throw one other thing out there at you, and that is the heat coming into the Southern Plains. We're talking about 100-degree temperatures in hard red wheat country. That means Garden City. That means feedlot country. That means dressed weights are on the table to go down if this heat stands on us for 2, 3, 4, 5 weeks. And I think that's an added element to, if someone would say to me, what could we ever do in the August live cattle market to get back up to the September 2023 highs, when I wanted to sell and didn't get much done? And I'd say either a big strong push to the downside of the dollar or a really long heat wave in the Southern Plains that shows dress weights going down dramatically a month from now.
You mentioned negotiated cash. Let's look at one more chart, that with the pork cutout. And I will say I didn't look much at the beef production numbers on the WASDE either. I did glance at the pork numbers, and it looked like the hog market got some friendly demand news that helped futures a little bit Wednesday. It seemed like I got to look more in those numbers. I'm sure you do too. But walk us through this chart and some of the correlation here between cash cattle and the pork cutout value right now, Mike.
Well, that chart, this chart really works well with what you just said, because you can see the pork cutout on the left-hand side in purple is, less than $100, while your negotiated cash cattle price is banging on, as I said, 190. What I like about this chart is look at the distinction between the two. Look at the spread or the distance between the two lines. The pork has been cheap for almost all of 2024 and even into late 2023. And so if the hog market would start to go higher here, and I think seasonally it can as we get closer to July 4th with the BLT seasonal, if we start to see that cutout go up, that can only go, I think, good and be in favor of supporting the negotiated cash cattle market. And so hogs become much more important to me this next 30 days as far as upside potential in the cattle. I put it in the same column as the weather. We don't know what's going to happen, but if they go higher, I think it could really support the negotiated cash. And the reason I bring the cutout up right now on the pork side, Jesse, is because China's pork and hog prices I've been watching the last 3 weeks, they're really starting to move. They've gone from about $1.40 a pound up to $1.80 in areas like Sichuan, Jilin, very big areas of production and consumption. They're on the move, and this is one of the reasons why I'm not as nervous about Chinese deflation, especially agriculture commodity deflation, because pork is such a big element of their consumer price index. But we've had some really good gains in the pork market price-wise in China. I think that could start translating over to our market here, especially once we get past that June hogs and pigs report.
Let's put a bow on it here today. Mike, final thoughts, anything you want to mention or reiterate to folks listening in today?
Yeah, big thing is the dollar, the crude oil, the wheat, the copper. These are the markets that we want to see turn because they have the most validity to them. And so I would say that's where I sit here in mid-June. If I lose technical support, I don't get what I want at the end of this week, Jesse, I'll be forced into getting some more paper positions on in the soybeans. Probably still not going to do anything in the corn unless clients want to. And I'll probably do off the combine selling on the wheat, but then be really quick to re-own it on the next buy signal I find.
I know folks can find you very easily online. Take a look at your research and more. Where can they get in touch with you, Mike?
Globalcomresearch.com. It's globalcom with 2 M's research.com.
With that, Mike Zuzolo, Global Commodity Analytics. Appreciate the time, sir. Have a great week. We'll talk to you again next week.
Thanks, Jesse. You have a great week too.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.